Most people are stuck in a system designed to work harder and not smarter. We're here to expose the strategies, the loopholes and the life hacks the 1% use. This is universal basic knowledge.
So it's not a laughing matter. Everyone's complaining about mortgage rates, 6, 7, sometimes more percent. But what if I told you that people are still locking in as low as 2.6% rates? You're not, but they're still doing it in 2025. This isn't clickbait, it's a strategy. The constant rising rates have priced a lot of people out of their market. But while most buyers are stuck going to the banks, the wealthy know this. You don't need to get a new loan to buy real estate. You can actually take over someone else's loan. So the idea here is something called subject to. And this platforms that we're going to talk about are some platforms that are creating opportunity for you to find the subject to loans, or subject to loans and subject to properties, because not every mortgage company allows for this. But we're going to show some examples of how this works, and we're going to unlock them for you so that you can find sub 3% loan rates today and get these properties for you and yourself. So most people, when they want to buy a home, they're just going to go to their local bank. Their bank are going to offer their terms, and those terms usually aren't very competitive. And sometimes, most people just take them. You can actually negotiate a lot of aspects of your loan term and your loan rate, and especially the fees that are happening within that. That's something that we'll discuss in a larger video. But one of the things that is way, way more interesting is if you can cut that interest rate in half, especially in today's interest rate environments. And there are 3 ways people are getting these sub 3 rates right now. They're basically assuming loans from the FHA, VA, USDA loans, and even others. And that baits that you can take that seller's mortgage and get that same interest rate. That means if that person locked in 2.6% during the pandemic, you get to inherit that deal. So a lot of people bought homes at 2.6% interest rate, 3% interest rate back in 2020, 2021, when money was cheap. And now some of those people are needing to leave that property for whatever reason, and you can inherit that deal. This is a really, really interesting opportunity. So another way that people are doing this, and I just wanted to mention this before we go back into how to get to these loans and the platforms that you should check out, is also seller financing. Seller financing is a concept where you don't need to go to the bank to get someone to let you buy that property. So essentially it means that I am the owner of a property. You come and you say, hey, I want to buy your property, and I am willing to actually provide a loan directly to you, and you pay me, right, to buy this property. This often comes with a pretty large down payment. Because the sellers, they need to be pretty motivated, but I do see some seller financing deals. A hack for you to find these, if you want, is you could also sometimes put them into Zillow and just put in the search term seller financing as a search term, and you can see opportunities where that is there. And so that's something that you can take advantage of and sometimes be able to buy the home of your dreams without having to go through the traditional bank route, especially if you can't get a mortgage. So that's another opportunity. But the subject to deals is really getting the existing mortgage and the title transfers to you, but the loan stays in the seller's name and you take over the payments, essentially. So this is very legal. It's not something that every single mortgage company does, but it is something that is very possible to do. And this is the best when the seller is motivated, because that person may have bought that home and then had to go through a divorce, or maybe they got relocated for their job. You don't know the situation on why that seller is selling, but there's a lot of people that are selling homes that they got in 2020, 2021, and they may sell it traditionally. But then if you go to the bank and try and buy that same home, you're going to get that 7% loan. But if you can assume a 2.6% loan, that is a huge monthly payment difference. We're going to go through what the math looks like on that here in a second. So these aren't just backdoor hacks. These are strategies that most people are never told about. And you got to think about this, like real estate agents do not push these. Banks definitely aren't going to push this to you. Like there's no incentive, right? And specifically, real estate agents may not make money on these deals, especially from some of these platforms, because these platforms are listing the subject to opportunities, but real estate agents aren't going to make their commission on that, right? So they're not going to tell you about it. Banks also want to make more money from you. So why would they tell you about it either? So that's the opportunity that we see here. And we've seen people take over homes with a $1,400 monthly payments when the market rates with the current interest rates today would have been $2,400. That's $12,000 a year in savings just by using this smarter method. So the example here that's most relevant is the difference in pricing that you're going to see. So here is a $400,000 home with 20% down at 7% interest versus 3% interest is what we saw in 2021, 2022 early part, and 2020. Now, with the 3% interest, your monthly payment is going to be $1,350. With 7% interest, for the current environment today, it's $2,130. The difference is almost $800, right? And so $800, but that's all going towards interest every single month, right? So you're just paying interest. So every year, in this scenario, you're paying $800, or sorry, in this scenario, you're paying $800 times 12, which equals, $9,600. So, essentially you are paying 10 grand a year more in interest under this scenario. And so you think about that over the course of 30 years, it's a very significant amount of money. We're talking about several $100,000 more that you are paying. So you do not want to do this. We're going to write in a very small font because, it's not good. So at the end of the day, if you need to buy a home, you buy a home, you get a good deal, and you're going to be subject to those interest rates. That does happen, but if you have an opportunity, you can check out some platforms that allow for this concept of these subject to loans. One that I've recently found out about, because I only found out about this platform over the course of the last couple of weeks and wanted to do a video on it. Again, not getting paid by them as an affiliate or anything like that. Once I saw it, I thought it was really interesting. So wanted to do a piece on it. But the concept or the website is called With Rome. This is one of the first platforms that I've seen that are basically taking these subject to assumable mortgage-friendly loans and creating a platform out of it that allows you to find these opportunities and then essentially lock them in for yourself. And you can search the entire United States. And the platform's still in its earlier stages, but they've raised a lot of venture capital money most recently. And so check it out. There are likely others out there. There's a lot of private market deals like this as well. There's Facebook groups, there's funds that focus on this, but this is a very, very interesting opportunity and would encourage you to check them out. So these strategies are everywhere right now, especially with millions of homeowners locked into sub-3 rates they can't take with them. You just have to know how to ask and where to look. And while most buyers are playing by the bank's rules and overpaying, the 1% are taking over existing mortgages, structuring seller financing deals, and locking in sub 3% rates we haven't seen since 2021. This isn't about having more money, it's about having better information. If this sounds interesting to you, join our free community. You don't need to be rich to live like the 1%, you just need to learn what they do. This is universal basic knowledge.